What's going on, everybody? Alex here, and today I wanted to talk about the importance of having an emergency fund. Now, one of the things that clients scoff at the most when we engage in the financial planning process is when we discuss emergency funds. And every time I get the same reaction from clients, and they're amazed at how much we tell them to set aside for a rainy day, because it's a lot more than they expect is necessary, and they feel sometimes that it's a bit excessive. And there's two basic pieces of advice that clients ignore all the time. One is consult with your attorney. Never happens. The other is maintain a decent emergency fund. Now, for some odd reason, these are the two most disregarded things. They're not fun, I admit. Nobody wants to talk to attorneys. No one looks at their emergency fund and goes, yes, awesome emergency fund. But at the end of the day, it could be extremely helpful. Now, as a general guideline, as financial planners, we want to see a minimum of 3 to 6 months worth of expenses set aside in a nice, plain old vanilla checking or savings account ready to go at a moment's notice. At the minimum, okay? It makes us feel warm and fuzzy inside to see 6 to 9 months of expenses sitting there in a good old boring checking or savings account. Now, in some situations, we even advise clients to have 9 to 12 months of straight up expenses just hanging out in a checking or savings account. And clients' eyes go like this when we tell them this, because they always feel like it's never going to happen that I'm going to need that amount of money on hand, or I have these other accounts, I have these IRA assets, these 401ks, these 403bs, what have you, and they feel safe. But inevitably, there's going to be a situation where the need for an emergency fund becomes apparent. And what better example than what we're experiencing right now with this coronavirus thing? I mean, if you asked anybody 3 months ago if the entire country and the world really is going to be shut down due to some kind of biological threat in the form of a virus, people would tell you to take off your tinfoil hat. Nobody saw this coming. Even hedge fund managers whose job it is to see things like this coming. We got Ray Dalio. This guy manages a fund multiple billions of dollars. And he even admitted, he goes, yeah, I didn't see this coming. I didn't know how to manage this. This is unprecedented. So the need for an emergency fund has probably never been tested more than right now. And once things hit the fan, it becomes too late then to consider, oh, well, I should really set this aside. I should get these funds and those funds, because it's generally already too late. And as people, we become comfortable. We become used to what has happened most recently, right? So we had a tremendous bull market, and it seemed to be unstoppable. Unemployment was at a bare minimum. The market was just raging up like there's no tomorrow. So you start to feel safe, even though it's not that far back that we have to think to 2008, to the Great Recession, financial crisis, whatever you want to call it. And before that, the dot-com bubble, right around 2000, 2001. Now, they seem to happen every 10 years. Now, I don't know if that's by design or not. That's a different video altogether, and depends on if you want to take out your tinfoil hat or not. But it tends to be that every few years or so, the need for an emergency fund is tested. No matter how good conditions are, no matter how bulletproof the stock market seems like it happens to be, there's always an event, there's always the need to have those emergency funds in place. And this is not meant as an I told you so, right? Because nobody benefits from like, oh, well, I told you to have an emergency fund, now you don't. Here we go. Nobody benefits from that. So if anything, this is an opportunity to think about the next time you may need those emergency funds. How much do you have set aside? And how much do you need to add to that, right? Because when we do planning, and I'm talking about planning from a fiduciary perspective, not planning when they're trying to sell you all sorts of insurance policies and all of that nonsense. When we do client-focused planning, the first question is the emergency fund. We don't want to hear about anything else. If a client says, oh, well, I want to make these investments, buy this real estate, I want this annuity or insurance policy, none of that matters until we have the emergency fund in place. So you can't have a conversation about investing if your cash flow needs are not going to be met in a situation where you're going to face a crunch. So we first establish, okay, if you don't have the emergency fund, how we're going to get there. We're going to put aside this much cash until we hit that point of 6 to 9 months of expenses, 9 to 12 months of expenses. Then we could talk about all these other things, investing in the stock market, this, that, and this, because ultimately having that cash available can make a tremendous difference, as we're seeing now. Again, unprecedented conditions, but also a great reminder about the importance of emergency funds. And I only say this because this is something that clients ignore more than anything when we're doing financial planning, is they see that number being 9 times their monthly expenses, and they just can't believe it. I mean, what do you want me to hold $200,000 in a checking or savings account? In some situations, yes, that's exactly what we want you to do, and it might not be enough. So with that said, this is a good reminder that emergency funds are essential. But on top of that, you also need to consider liquidity, right? Because I have a lot of clients that say, wow, I don't want to hold all that money in a checking or savings account. I'm going to put it into a CD. I'm going to put it into the stock market. I'm going to invest in some equities, some index funds, whatever, what have you. And the problem there is that it decreases your liquidity. So when you need access to those funds, now you have some friction. Now you have some barriers that you need to get over to get access to that money. Now, let's take a look at what happened in the stock market. Let's say you're holding some index funds, this, that, and the other, and then boom, it's down 30% before you can blink. Are you going to want to sell now? Are you really going to want to liquidate those investments when they're at bottom basement prices to generate cash? You're probably going to need to in some situations. It's going to hurt. It's going to hurt, and psychologically, there's going to be a barrier there to where it's going to cause even more stress for you than it should, just based on the initial drop, because now you have to pull money out, and essentially once you lock in the loss, it is what it is. You're not going to get that money back. So that's one situation. The other situation is clients that have tremendous IRA assets, tremendous 401k assets, 403b assets. That's all great. But if you're under a certain age to access those monies, first of all, you may not be able to if you're still employed by whatever company administers the plan. Second, if you're under a certain age, you're not employed by that company, you may be subject to early withdrawal penalties. Now, I have to look at the 880-page bill that was put out recently to see if there's any sort of relief in that respect. But in general terms, that would be applicable. On top of that, even if you're above a certain age, you don't work for that employer anymore, you could be retired, it's still a situation that if you're taking monies out of a 401k or an IRA, if they were pre-tax to begin with, now you're facing income tax implications, and you have to work that into the equation, because if you need $100,000 but it's going to be taxed when you take it out, then you're going to need more than $100,000 in terms of the distribution to get where you want to be. So that's why liquidity is also important to consider, because it's not just having assets, it's having assets available to you in a readily available way. Readily available in an available way. We're live, folks. This is what happens. But anyway, it's important to consider that even if you have significant assets in stocks, bonds, mutual funds, this, that, and the other, you may have a situation like now where cashing out is extremely disadvantageous. So it's not something that you're going to want to look forward to. Having that cash in a savings or checking account might be much more advantageous, just in terms of being able to access it. And God forbid something happens to you where you don't have access to your brokerage account, your Schwab account, Fidelity account, because you're in the hospital or something, right? Your family's going to have to navigate all of that, right? So now they have an even more significant barrier, because if they need to access funds on your behalf, now they need access to all these different accounts. You're not available to sign for it. It can create a huge mess unless you have all sorts of powers of attorney and all of that already in place. It's a different story. But in general, my thesis here is that if you have not taken emergency funds seriously up until this point, definitely think about it, because it can make the difference between the next bad situation being bad and very bad. All right. And I can tell you that the people that heeded the warnings and they put aside those emergency funds are feeling a lot better now. I can hear it in their voices, because they're okay with the situation as far as cash flow. They're not in a crunch, and they're not having to liquidate assets in a disadvantageous time where it might cost them even more than it would if they just held those assets in a checking or savings account. So especially the ones that got into the market very recently and now they face a steep decline. They're not happy campers, I can tell you. Hopefully that helps shed some light on the importance of emergency funds. If you guys have any questions, feel free to drop me a line. And as you can see, I'm broadcasting here from the social distancing capital of my casa, as they would say in Canada. And we're having fun. The tea is flowing and the tax questions are getting answered. So hopefully this was helpful. Thanks for watching.